Jamaica is a highly prospective target area for different kinds of deposits in an island arc terrain.
As probably the most widespread, intensive, and in-depth exploration program that's ever been carried out in this island.
5 or 6 years worth of work into just 2.
No one else has ever done this before. There has been historic work on the island, trending back 150 years.
I think they're getting excited, as we are, so stay tuned.
So, good afternoon for those of you dialing in from Australia. Good morning for those of you dialing in from London and Europe, and good evening for those of you dialing in from Canada and the USA and North America. My name is Andrew Thate. I am from Minds and Money, and I would like to welcome you to our pitch battle heat number 2. This would be the forerunner to our Minds and Money March Online event that runs from the 23rd to the 25th of March. And the winner of this heat will go through to the final. But to provide you with more details about today's contestants, also today's investor judges, and also the rules, I'd like to hand you over to our host for today, who is Jochen Staiger, Chief Editor and Founder of Commodity TV. A warm welcome to you, Jochen.
Andrew, thank you very much. And yeah, good morning from Switzerland. It's really early here to everybody in the world. And also very warm welcome for our contestants and our judging panel. Yeah, as said, my name is Jochen Staiger. I'm the Chief Editor and Founder of Commodity TV and Rohstoff TV. And it's my honor and pleasure to be your host here and MC today. First of all, this is like Shark's Tank or Dragon's Den, or as we say in German, Höhle der Löwen. And but we will be much more polite than those gentlemen in those TV shows, as we are all in the same boat, right? But first of all, let me introduce our contestants. We have starting then Matthew Gill from White Rock Minerals. Afterwards, thank you, Matt. Then we have Mike Young from Vimy Resources. And then we have, last but not least, Marco Roque from Casia Gold. And also we have, hi Marco, and also we have a great judging panel here, starting with Stephen Motteram from the Noble Group. Then we have Gerard Farley from Empire Securities Group. Then we have John Zadkovich from Kingseed. Then Michel Labrousse from Mazarin Capital. And also last but not least, Joe Bishop from Resource Capital Funds. The format is very simple. Each of our contestants will present 3 minutes, and then I will hit my lovely buzzer here. And afterwards, we have 8 minutes for the judges to, yeah, could you please unmute Michel, because we can hear everything. And then we have 8 minutes with the judges with the questions. And I would, yeah, like to invite Matthew Gill from White Rock Minerals to get started.
Thank you, Jochen. Hello, judges. I'm going to be fairly quick and convince you to invest your $1 million in the White Rock story. So White Rock, why invest? We have 3 opportunities for the investor. We have a large land holding in central Alaska, 800 square kilometres. We kick off with 9 million tonnes grading 609 grams per tonne silver equivalent. Within a global resource. We have VMS and we have gold. So there's our land package. This season, we plan to drill. We plan to drill and we plan to drill. And that's, I think, the great opportunity for the investor. We'll be drilling our 9 million tonne open along strike and down dip VMS, silver zinc. We'll be drilling our large 30 kilometre square IRGS gold target. And we'll be also drilling recently identified VMS targets to the north of Last Chance that we only announced 2 months ago. We made those 2 discoveries, the Last Chance and the VMSs. We're also merging. We're merging with a Victorian gold explorer and producer, 670 square kilometres of land with a producing mine. So to give you some sense, we're not a one-trick pony. But wait, there is more. We have joint ventured our gold and silver project in northern New South Wales. So White Rock will be free carried through the permitting and definitive feasibility study stages. That allows White Rock to focus on our Alaskan and our merger with the Victorian company. So why should you invest? Drilling. in Alaska, merging with the Victorian gold explorer and producer. And I should say that that company has the Morningstar gold mine, which produced 800,000 ounces at 26 grams a tonne in its time, and is located southeast of the famed Fosterville gold mine. But, and importantly, I would like to point out, we're not Hotel California. You can put your $1 million into White Rock, watch it improve over time, and if you have to leave, our liquidity is good. We are on the ASX and on the US OTC. With that, I hope I've convinced you in this very short space of time that White Rock is a good proposition with 3 opportunities over the next year. Thank you.
Perfectly in time. Thank you very much. Yeah, so now our judges, please get prepared and raise the hand for questions. 8 minutes. Who wants to be first? John? John Zadkovich?
Thank you very kindly for the presentation. Couple quick questions. You've mentioned you've got the several opportunities. The priorities seem to be between Victoria and Alaska. First question, could you just identify which of those 2 is the priority for the company? And secondly, I think you mentioned the Victorian asset is producing. Could you just give us some detail as to production figures? Thank you.
Yeah, sure, John. So look, the plan for White Rock is actually to do 2 prongs. So our immediate focus right now is the planning to get on the ground in Alaska. We've already secured a camp, drills, contracts. The merger with Victoria and Ozstar is going through that process, and that won't consummate till June under the scheme of arrangement. So get ready for Alaska and then Ozstar to follow. In answer to your second part of the question about Ozstar, look, the public domain information is on the website. They release quarterly reports. They are their own listed entity. It's relatively small production volumes at the minute, a couple of 100 ounces per month. But the opportunity in mine exploration and also to ramp that up is what we see as one of the great opportunities, John.
Thank you.
Thank you. So who's next? Gerard?
Yes. What sort of cash are you sitting on, and how much in the next 9 months will be spent on Alaska and also in Ozstar in Australia?
So Gerard, your $1 million invested into White Rock will certainly help. But currently White Rock cash on hand is 11 million. So we're at Australian. So we are nicely placed. So we can certainly get on the ground and start drilling. We're looking at being quite aggressive in Alaska. The fixed costs of a camp and a chopper make the addition of a rig not as bad as it sounds. We've run 1 drill rig programs before. We're looking at up to 3 this time round.
And what's the window for you weather-wise?
So we've already engaged SkyTeam to fly airborne next month. You don't need the snow to have melted for airborne magnetics. Or geophysics, I should say. We expect to be on the ground, climate depending, around the end of May, early June, and then depending on the weather, running through to September. So it's tight, hence more than 1 drill rig is efficient, effective, and very military precision planned.
Okay, Stephen?
Yeah, thanks for the presentation. I guess my concern over the next couple of years would be that quite a lot is probably going to be spent on the Alaskan drilling side. It seems like there's a great opportunity there. From a dilution perspective, do you think with the Ozstar merger, if there's some cash flow from that, and also from this free carried interest with Mount Cannington, that the Alaskan program can become self-financing without you needing to come back to the market to raise further equity from shareholders?
So that's a possibility, Stephen. We do have a track record, and I think you can see it elsewhere with Alaskan explorers, that I think ultimately you need a partner. White Rock 2 years ago had Sandfire Resources as a joint venture partner. You'll see that others in Alaska have joint venture partners. Trilogy with South 32 is another good example. So I think ultimately for White Rock, a joint venture partner or even a spin out of the Red Mountain asset is probably more likely than being able to self-fund, because Alaska, while fantastic opportunities geologically, is expensive.
Okay, thank you.
Thank you. Then who is next? Michel?
Just a quick question on your Alaskan prospect. What are the milestones that you are expecting to go through for the next year, and what's the permitting situation? Because I remember we had a conversation around the permitting was maybe a couple of years ago on this same prospect. So how difficult or how easy is it to get the proper permitting in Alaska?
So permitting wise for exploration, it took us 4 months from beginning to fully permitted for drilling, and that included dealing with the US Army and the Fisheries Department. So permitting for exploration is very easy. I mean, Alaska is in the top 5 of the Fraser Institute, and that's one of its reasons. In terms of so we're fully permitted for the drilling program that we've just mentioned. In terms of milestones, the 3 prongs, drilling the Dry Creek 9 million tonne, 13% zinc equivalent. So we're looking to add tonnage and depth to that deposit. Last chance, we're going to be doing a second season there to drill deeper to find the high-grade gold feeder structures that we believe are there. And the third objective is the new prospects, VMS prospects that we just announced in January, to put a drill rig on some of those and see what we've got. So 3-pronged attack, Michel.
Thank you.
Then, don't be so shy, judges. Questions? Yeah, John.
As to the Alaskan asset, what's the infrastructure do you have on site and in proximity?
Yeah, good question, John. So Alaska is infrastructure poor. The Red Mountain project is only 100 kilometres due south of Fairbanks across flat land. And we're also only 40 kilometres due east of Healy, which is on the main road between Fairbanks and Anchorage, the 2 major towns. There is no road there, so it is chopper supported. But given that we're between 30 and 100 kilometres from the nearest main towns and all-weather roads, given Alaska is infrastructure poor, that's actually not too bad. We have 2 camps. We have a camp and a drill already on site in the eastern part of our tenement package. And we've just rented a 30-man camp to support our western last chance target. So we're well resourced. Access chopper is only half an hour, single engine Cessna, and camp's already there.
Thank you.
Great. Joe Bishop, please.
Yeah. How much does it influence you having a management team in Australia and the project in Alaska and pre and hopefully post COVID? Do you think it matters?
So, Joe, that's a good question. So this will be our 4th season in Alaska. We've got a great team based out of Fairbanks. We couldn't do it without them. So we actually raised $15 million last year and ran a program in Alaska without actually going to site. I mean, frustrating, but the team on site, these Zoom calls and the people that we've got there allow us to run it. We ran last year during COVID without incident, any issues, on time and on budget. So look, it can be done, Joe. We rely on the guys. We talk regularly with them on site. They, at the end of the day, are the guys running it in daily contact with us.
And perfect. Thank you very much. That was really on the spot. Great. Thank you. Thanks for the presentation. Thanks for the questions. And we come now to our second contestant, who will be Mike Young from Wimmy Resources. Mike, when you are ready, please get started.
Okay, I'm going without slides, so we don't have any technical glitches. This is about uranium. It's about nuclear power. Who knew that people would love nuclear power again? Biden loves it. John Kerry loves it. Bill loves it. Elon even loves it. And Vimy is leveraged to the green energy story. Electricity demand is growing. It's related to GDP. You can see the growth in China. You can see the growth, particularly in non-OECD countries. And that's where we expect to see growth in the nuclear sector. Electric vehicles. We hear lots about electric vehicles and how clean they are. Well, electric vehicles are only as clean as the power used to power them. For example, if you're in Queensland powering it off the grid, electric vehicles still 80% dirty. But if you're in Ontario, Canada, where they have nuclear power and hydro, it is 10% dirty. Still putting out CO2 emissions, but very, very low. So nuclear is the cleanest, safest dispatchable power that there is. Right now in the world, uranium demand is increasing at about 2% per year compounded annual growth. By 2040, we expect to see 52% increase. Because of the climate emergency, because changes in policy, people are accepting nuclear. We are seeing production cutbacks. Last year in the world burned 180 million pounds of uranium and only mined 120 million pounds. There are shortages now, and there are shortages going forward. The expected supply gap is expected to grow to 100 million pounds a year by 2030. And the uranium mining sector is currently not geared up to meet that shortage. So Vimy is excellently guaranteed, to have a seat at the table. Demand's increasing. We're going from 392 gigawatts to about 569. And as I said, the supply shortage is really biting, and we're seeing it bite now. Consensus outlook for uranium price, even though what we see is the spot price, really what's important is the contract price. The consensus outlook from 25 onwards and long term is above $60 in the contract. That's very, very healthy. That's a number that is needed to sustain current and expected global uranium production. The current spot price, no one makes money. Vimy Resources is listed on OTC and the ASX. Our shareholders are predominantly retail. We have some big names on the register as well. Paradise Investment Management in Sydney, and Andrew Force has been a long-term supporter of us. And in fact, one of his employees is on our board. We have about 11% institutions, and directors and staff are on salary sacrifice. We believe in this story. Share price has gone up remarkably, about 300% since early December, since Biden said go for nuclear. But the uranium price has not, and therein lies the opportunity. We're going to have a double boom. We've had the first boom, second boom's coming when the price goes up. Vimy ticks the ESG boxes. We've got clean green portfolio. Uranium is central to clean energy transition. We've got great environmental credibility. We've got a social license on site, and we've got a board and team who've built projects before. Mulga Rock's our big project, 90 million pounds. It's large, it's a 15-year mine life. It's got an NPV of 393 million US at a $55 price. It is near term. We have done a DFS on it. We've done a DFS refresh. We've done test pits. We've de-risked it. It's ready to go. All we need are contracts from the US. That'll then roll into funding, and that'll roll into debt funding and equity. We also have a great uranium project up in the Northern Territory, the Alligator River project.
Mike, I'm sorry, those were your 3 minutes. You're a fast talker,
I was done.
3 minutes are 3 minutes. Yeah, that's why I raised that here.
That's right.
Okay.
I wasn't watching you. I was watching my script.
Yep. So, question, Stephen. I think you have raised your hand. You have the first question, Stephen Motteram.
Yeah, thank you. Mike, thanks for the presentation. I did peek and have a look at your DFS overnight. So looking at the CapEx for Mulga Rock and thinking about when you do get an offtake in place, say with some US utilities, and presuming you could get quite high leverage, let's say 80% of your CapEx finance through debt off the back of the offtake, who would be the obvious debt financiers here? Are there commercial banks who are still willing to finance in this space, or is that problematic? Or who are the sort of debt?
You'd go to Societe Generale or Natixis, French banks, who France has 75% nuclear. They're not afraid of it, and we have had early discussions with those banks.
Yeah. Okay. And then I guess a follow-up question is just more about the S&D. So, yeah, I noted you're targeting the US, and you've got a guy over there helping with that, which is great. But in terms of that shortage that you're talking about over the next few years, a lot of that shortage seems to be, a lot of the growth in demand is not necessarily in the US, right? It's more in other parts of the world like China. So, how do you kind of match filling a gap with your potential offtake partners in the US when the growth is not in the US?
Sure. The US produces 0.4 million pounds of uranium a year, and they burn about 48 million pounds. So there is no US domestic market. They get all of their uranium from overseas, either Canada or from Asia, and a bit from Australia through Olympic Dam. So the US, because the US sources all their uranium from overseas, what we'd expect is that the growth in China, India, and Middle East will suck uranium out of some of the producers, particularly in Asia. And the US also runs portfolio management of their uranium, where they want to spread the risk as wide as they can. You mentioned having Scott in country. We've done a lot of research on how much of a market there is there for us, and the market is for Vimy's material specifically is actually bigger than what we'll produce. So we know there's a market there. It is shrinking, but our view and the data that we have is that that market will stay open for us, and that shouldn't be an issue.
Thank you.
Joe Bishop, please. Yep, Joe Bishop.
Yeah, thanks, Mike. Yeah, Mike, how much are projects of your size typically worth? I see your market cap's around 100 million. So where are you trading at relative to sort of market value of similar projects that are, say, in production?
Sure. Well, actually, I had a slide on that, and I'll just read it. So our EV to NAV is about 0.16 times. The average among our peer group is about 0.52. So there's about 2.5 to 3 times leverage there. Some of the companies that are probably a little bit overvalued are up at about 1.2, but generally we are still pretty leveraged to our EV to NAV, and that was one of the a research note came out recently from Shaw and Partners, and that was one of the things that they highlighted, that we are actually quite a good leverage play.
Then who is next? Yeah, Gerard, please.
Yes, you've got a terrific register with Andrew Forrest and Adam Harvey and David Paradise and half of Collins Street, I see.
Yep.
But I think you've got about 4 million cash. Is that right?
That's correct.
And how much is a yearly spend on the ramp up?
Our average burn rate's about 350 a month. So I'm not very good at math. So yeah.
And have you got any extra? What are the next milestones in terms of total value creation, if you know what I mean?
Yeah. So we are doing work on enhancing some of the DFS. We've got KPMG on board to help us. We are looking for partners on the projects. The project itself, the DFS is complete, but like I say, there is some room to improve that. And then the exploration season in the Northern Territory starts in June, so we get up on country in May. And so we're looking at whether to do exploration up there or not this year, just depending on funding. But that would generate some excitement from, that's a big, large unexplored area that hosts things like Jabiluka. And then the next big thing for us is the second half of this year, we're intending on starting some initial work up on site. And that is to satisfy one of the conditions of our ministerial approvals. So that's some stuff that we're currently working on with respect to the schedule and the budget. And then, of course, we have Scott in the States who's, liaising and socializing with the various utilities to, when they start contracting, to be at the front of the queue. And having put that time and effort into the States with Scott, we've got a very good or very confident that we'll be getting contracts when they start rolling out. That particular activity is in the hands of the utilities when they finally come back to the market. But as their stockpiles and inventories are slowly dwindling, we expect that to be relatively soon.
Yeah. Next question. Yes, John Zadkovich, please.
Mike, thank you very kindly for the presentation. 2 questions. Where are you presently on permitting? Are all your permits in place? And secondly, you touched upon ESG, given the sensitivities with uranium generally. Can you give a little bit more detail as to your ESG policies? Thank you.
Sure. So with respect to permitting, we have all of our tenure. We've gone through all of our heritage assessment. We have our state and federal ministerial approvals. Those are conditional upon us satisfying particular conditions like management plans, which we're working through. We're currently finalizing a management plan for an on-surface tailings facility that we never intend on building, but that's how approvals work. And then we're working through the other secondary approvals like the works approval and the mining permit. In terms of our ESG, we've just adopted the Mineral Council of Australia has just adopted the Towards Sustainable Mining framework, which comes out of the Canadian Institute of Mining and Metallurgy. So I'm on the board of the MCA, and I was very much in favor of adopting that framework. And that's a framework like an ISO framework where you are it provides the framework to both set out and measure your ESG targets. But in terms of Vimy specifically, we intend on using our pits for tailings disposal, and that's probably one of the biggest issues today. That in fact there are some consulting companies won't even sign off on tailing dam designs any longer because of the inherent risk, and we saw that in Brazil. So because our tailings are going to be buried in the pits and then covered in clay, that's a very big tick in the box. We're also going to be putting our waste into our pits so that our residual impact at site is probably the lowest it possibly can be. It's real world first stuff. And then in terms of our First Nations people, we've had constant contact and relationships with the knowledge holders of that area since 2010. And we just know that there just aren't any sites that are going to be disturbed, like we don't have the threat of a Jukin cave or anything
I'm
like that.
sorry, 8 minutes are over. Thank you very much for answering. Thanks for the questions. And we come to our last contestant now, who is Marco Roque from Cassiar Gold. Marco, when you are ready, start please.
Thank you. Can you move the next slide, please? Thank you. So Cassiar Gold, we are a Canadian gold explorer located in northern BC. So our flagship Cassiar Gold is a very large land package. We have 56,000 hectares surrounded by infrastructure. We have Highway 37 coming from the south. We have a permitted mill, 300 tons per day, multiple property access roads. We have a camp. We are very, very attractively valued. Our market cap right now is 23 million Canadian dollars. We have over $5 million in the bank, so that's less than 18 Canadian dollars per ounce on the ground. Our flagship North Cassiar, or Cassiar, is separated in two areas. North Cassiar, which hosts the Taurus deposit, that's 1 million ounces at 1.43 grams per ton inferred. That's a flat-lying, near surface, a very shallow, a resource that is open pitable and open in multiple directions, which is this little orange smudge on top of the yellow oval. It's an area of roughly 1-2 kilometers by 1-2 kilometers. And then at South Cassiar, we have the past producing high grade portions of our property. This is actually going to be the focus for our this year's drill campaign, where we have planned 15,000 meters. And these are 2 to 3 meter thick veins, 15 to 25 gram per ton material. Next slide, please. Our biggest asset is the people. We truly have a world-class team. We count with people like Stephen Ledwin in our board. He's our largest individual single shareholder. We also have people like Doug Kerwin, our chief technical advisor, quite famous for the discovery of the Hugo Dombe deposit at Oyu Tolgoi. James Maxwell, exploration manager of Sabina, or Chris Stewart, formerly with McEwen Mining, or Kirkland Lake, and more recently also added David Rees as our technical advisor. He's a structural geologist and one of the foremost orogenic gold experts in the world, which is the type of mineralization that we have. So next slide, please. So why invest? I already mentioned the foundational resource. I already mentioned the infrastructure. I mentioned the valuation. I already mentioned the team. But what we truly have is a multi-million ounce potential. We already have proven 1 million ounces, but actually you have a 15-kilometer belt, of which only the resource sits in only 1 kilometer. This belt is 15 kilometers by roughly 10 kilometers, so we can imagine the size. The resource itself is a bulk tonnage open pitable resource, but our focus for the next year is going to be the high grade. This has seen past production. The metallurgy is well understood. It's multi-million ounce, and there's truly a lot of potential because we have a district scale project in our hands.
Marco, thank you very much. Great presentation. And now it's up to our judges for the 8 minutes. Who wants to? Yeah, Joe Bishop, please. First question.
Thanks for the presentation, Marco. I mean, 1 million ounces inferred is a good start, but how quickly do you think you can grow it from here?
Well, that will depend very much on our exploration success. So for this year, we have roughly 25% of our drilling dollars allocated to continue to grow that bulk tonnage target. So the million-ounce resource is open basically in all directions, so it's unconstrained. But we are going to be doing selective follow-up and step outs into the southern as well as the western area, because this is an area that we see slightly higher grades, which are 2, 3, 4 grams. So that's going to be 25% of our focus. For the high grade, we're going to be stepping out from the veins. So there's roughly over 20 veins there. So we're going to be looking at the last drill holes, or actually this is what we're doing right now, and stepping out from these drill holes, as well as the area is really big. It's 15 kilometers. So there's a massive gap in terms of room to grow, in terms of not only stepping out and continue to explore these veins that have been only partially explored, but also find new veins, because the system has the size to host multiple veins and for stacking as well. So it will very much depend on how successful we are, but we are very confident on this drill campaign. I mean, it's this is a 56,000 hectare land package. We see it as a multi-million ounce potential, but right now we're only focused on the 15-kilometer belt, and that can take a long time. But it's more of a matter of prioritization, and I think what we're going to see probably in this cycle is, and you're starting already to see, is M&A. And assets like these are going to be started to be taken out. You just saw recently the transaction of GT Gold, which is just a couple of hundred kilometers south from us, was acquired by Newcrest for almost $500 million cash. The same with Battle North in Ontario, also roughly $400 million cash. And it's you will see this M&A trickle down, and I think hopefully we can prove a lot of the potential before we become an obvious target.
And Stephen Motteram, please.
Yeah, thanks, Michael, for the presentation. I noted your point about the great infrastructure and the fact there's existing processing infrastructure there that's been on care and maintenance for a while. Could you just talk us through how that might be reused in the future, given about what you know about the ore bodies, and how that might help you either get back into production sooner or reduce the capex to get into production sooner?
Absolutely. So our mill is probably the most, I mean, we have highways, we have multiple property access roads that make exploration easy, and the camp as well. So, but the mill is the key here. It's a 300 ton per day mill, a gravity flotation. It's very small if you look already at the size of our resource, and basically also for the size of our ambitions. We will probably need something much bigger, even if we can considerably increase the grade of our resource inventory. In any case, that gives us a strategic optionality. If we want to start small scale, we have a permitted mill. And we also have the 600,000 tons of tailings at roughly 1 to 1.25 grams per ton that we could potentially monetize. But the biggest value that we have actually on the mill is the fact that it's already permitted, and it's already in disturbed ground. So re-permitting will be also that much easier.
Thank you. Who's next? John? Was that? Yeah,
okay,
John, please.
Thank you for the presentation. Just picking up on what Stephen touched upon, as for the permitting, you've got all your permits, you've got the mill there. In an ideal world, how quickly could you get that particular asset to production? And a second question is, you touched upon M&A. Is it the company's vision to go to production, or are you looking to be bought out eventually?
Absolutely. So in terms of permitting, like the mill is permitted, but I think you need one, social license to operate, and number two, the permitting from the government. So I think we could potentially, if we wanted to start with small scale, I think we could start that. We can, maybe complete that in like 1 or 2 years, realistically speaking. Now, I don't think that's our strategy. I don't think we want to rush this to production with 1 million ounces. We truly believe in the potential. We see basically gold everywhere throughout our property. Some of it already been extracted, but you see it basically outcropping in a lot of other places. And so we only really scratched the surface on our land package. So I truly hope we have an opportunity to prove at least part of the potential that this property has before we become a target. Into your second question, I think yes, I think the vision is and also thinking about the potential size that we think this is realistically going to get, which is multi-million ounce. I think the most likely scenario is that we eventually going to get taken out by a major, and mid-tiers and majors have depleting reserves, increasing cash balances, and assets like these will come up on the priority scale relatively fast. So I think that's the most likely scenario. In the meantime, we're very focused on proving that potential, and if the time comes and for some reason that M&A doesn't happen, we'll just have to readjust our team to as we look into the following steps. But I think that's a bit away right now.
Marco, thank you. But please, somebody can unmute yourself, please, because we hear all the noise in the background. I don't know, Michel, is it in your office? Or Gerard, you are alone?
Seems to be quiet
because
here.
That's not polite for the talker. Next question, please.
I have a short question for you, Marco.
Yes.
So what's you have a certain amount of cash in the bank. So what will it carry you through? What kind of campaign can you do with that cash? And would you be able to go to which extent before diluting yourself again?
What was the last part before what, Michel?
Now you have to unmute, Michel, otherwise we cannot hear you.
Yes, I was asking, how far can you go before raising more capital and increasing dilution?
Yeah, so right now we have budgeted 15,000 meters, so we're going to be drilling 15,000 meters. 25% of it's going to be focused around continue to grow the bulk tonnage at Taurus, which is growing already. We already successfully drilled that last year, continues to be unconstrained. And then, roughly 75% of the meters going to the high grade in building from, we already have 70,000 ounces historical on a high grade, but we know there's a lot more there, and hopefully we can build an inventory of ounces that high grade, 15 to 25 gram per ton that matches that gold tonnage. But we can take it towards the end of the year.
Marco, sorry, those were your 8 minutes. I have given you 10 seconds extra for the disturbance. Thank you very much. Yeah, thanks to the contestants. Thanks for your presentations. And now it's time for our judges to decide to whom you want to give your $1 million virtual. And I want to start with Stephen Motteram from the Noble Group. So who is getting your money, Stephen?
I think it's a hard one, but it's going to be one of the two gold guys. I just feel that there's more upside opportunity in the share price from the gold guys and less possibility of severe dilution from a capital raise that Vimy might have to go through to go into production. And I like the Cassiar story in terms of the existing infrastructure. 5 million of cash in the bank. I'm hoping that's going to get them a fair way through the drilling if they get some positive results. And I think there's an opportunity for their share price to re-rate. So I'd go with Cassiar.
Thank you very much. Then Gerard, Farley, what's your take for your $1 million?
Well, I like the strength of the register for Vimy resources, and Mike's got a very good opportunity there with what I do believe will be a swing back towards uranium, and that would be I could see with the register like that and the scope and the scale of the projects that could go up multiple times in value just by all those facts. But I like the grade and the quality of Matthew's white rock minerals. And if I could do it, I'd put 600 into Matthew and 400 into the other. But
you can only do 500, 500.
So on that basis, I'll have to. Oh, they don't need us. They don't need us. Mike doesn't need us with those shareholders. So I think I'll go with Matthew. And
okay, so the full million with White Rock, yeah? Okay, good, perfect. Then John Zadkovich from Emcee, please.
I like them all, but for reasons you've just outlined, obviously we can't hedge across all three. But I think I echo some of Stephen's comments. I like the Casia project. One, it's got the infrastructure. Two, the exploration potential. Three, the cash, and also the point I raised, the ability to get into some production in the relatively near term. And I also share the vision of the company there. I think that's positive. They're keeping some options open, whether to go to production or look for a buyout themselves. So Marco, 1 million coming your way. You owe me a beer.
I like that. It's great. So Michel Labrousse from Mazarin Capital, where goes your million to, please? Yes.
Hello, hi. Well, you know, I like uranium because I'm French, so that's my first inclination, and I really believe in the uranium story. However, you know, I've been a shareholder personally in Cassiar for a long time, and hopefully at some point that shareholder will be rewarded. And I really like also the Cassiar story and position, the closeness to infrastructure and the existing ore body, plus all the potential which can be, you know, unlocked in the next few months with the cash available before any more dilution for the existing shareholders. So, you know, if I had to put some money, I know we can't put 900 on one and 100 on the other, but, you know, no. Then I have to choose and give the entire amount to Cassiar. But I really, I'm sad for the uranium story, because I also like uranium, but, you know, we have to make a choice.
Yeah, super. Okay, thank you very much, Michel. Last but not least, Joe Bishop from Resource Capital Funds, to whom you want to spend your million.
Yeah, I'd like to spend some of my million on a better internet connection. So apologies for that. But then the rest of it, I would have to send it to White Rock. I really like that they're in elephant country. You know, the fund that I'm on is looking to make some multiple type returns, and definitely has a lot of risk appetite for exploration. I like the fact that they're not just the one trick pony. They've demonstrated that they're moving through some of their projects. They're taking new things on, joint venturing and divesting others. So they're showing some discipline and doing what I think doing what a lot of junior companies should be doing, is sort of averaging up in terms of the quality of their projects when they're at that early stage. They haven't kind of locked on to their definite winner yet, but they've got a lot of different opportunities in where I think they'll find something substantial.
Okay, super. Thank you very much, Joe. So that was quite close. So we have 3-2 with Casia Gold winning by 3 votes, and White Rock is second with 2 votes. And I like uranium too, Mike Young. That's no doubt of that. But thank you very much, for the presentations. Thank you very much for our contestants to give us the 3-minute pitch, and also thank you very much to our judging panel for placing very good questions. And Marco Roque with Casia Gold, you will be in the final next week, which is on 25th March on 5 o'clock London time. And hopefully we see us all tomorrow then to our heat number 3 mining pitch battle, which is tomorrow, Thursday, 18th March on 5 o'clock London time. And wish you all the best. I will make myself now a real big coffee because I need it. And stay healthy. That's the most important thing here these days, and hope to see you all soon. And don't forget, next week is from 23rd to 25th, Mines and Money online event. Hope to see you there also. All the best. Thank you very much, and bye-bye from Switzerland.
Thank you. Bye-bye.
Bye.
Thank you. Bye-bye.
Thank you.
Bye.